Well, market continues to move sideways here. Pretty much this entire week. We did see that big gap up on Monday morning, and ever since then we've been just pretty much moving sideways. So I'm gonna dive in today. I'm also going to follow up from last night's daily update video. So we'll go to 65-minute chart. We'll look and kind of digest what's been going on here. I do want to spend more time today on the indices, kind of give you guys more of in-depth analysis. So we'll start with the spider. We'll do Nasdaq, Q's there. We got Russell 2000 IWM and then Semiconductor. And you can see here, Russell 2000 obviously lagging quite a bit, 18%, about 18% negative year to date, while the Nasdaq is about 8% up, and Semi is almost breaking even here year to date. On the equity side, we're gonna look at Apple, Intel, Disney, and then let's do gold and silver, and we'll end the video with the Bitcoin. So all that coming up right now. Ladies and gentlemen, K Kim here. Welcome to the market update. I hope you guys had a good week trading this week. We are looking forward to long 3-day holiday weekend. Happy Memorial weekend. And I actually love, I don't know if you've been following for a while, I always say this, I actually really love these long holiday weekend. I think we need it. I really think we do need to kind of cool our brain, kind of get rid of that jitteriness and all of that, and just kind of relax and rejuvenate, refresh our mind, and come back to the market on Tuesday morning. And I really I don't pay attention to futures. Like, people really go crazy about the futures. I think futures were down 1% last night. It's not because I checked it. It's because on social media feeds, it seems like people are very obsessive with that. Every night, think about from late, think about the evening and all the way till next day. That's how you're gonna lose your sleep. And you really wanna cool down and relax and have a peaceful mindset before going to sleep, so you can have a good rest and get ready for the next day, so you'll be in a more cool, calm, collected mindset to able to make right decisions next day. But if you're just so occupied with the fluctuations of futures, I think checking futures or pre-market, aftermarket, I obviously, if you're a very, very short-term trader and you're very, very concerned about what's going to happen right at open, then I guess that's why I don't do short-term trading, right? And you guys know that I'm a position trader. I'm a long-term investor. So, couple-day move is not a huge deal for me, unless I'm kind of looking to exit my positions or looking to add more or I'll get into a new fresh position. Then I'll be keenly watching, but I still don't care about what the future's doing. And I'd rather have a good sleep at night, I'd rather have a good time, reading a book or just relaxing at night before coming to the market next day. And I always say that I'll just deal with it. Whatever happens overnight, I'll just deal with it when the market opens up in the morning. So it's been pretty useless, looking at the future. Even these grinding, the entire week, we're just been grinding, right? For 5 days here. And I remember there are days where futures were up 1.5%, and next day market absolutely did nothing. Futures are down about 1% last night, and market absolutely did nothing. So why waste time, right? Anyway, so unless obviously you're trading futures, right? You're trading futures. That's part of your strategy. Then obviously you would have to watch that. So let's follow up from last night's video, and let's kind of talk about what happened here. So here is the 65-minute chart on the S&P, and we talked about this level here, 293. And you can see we are now trading, we slightly gone below it, but definitely, and what we talked about last night was obviously we wanted bears to continue in this micro term downtrend, right? And you can see there's a lot of lower wick here. That means around 293-ish area, there's a lot of dip buying activities that have occurred throughout the day. And why is it 293 very important is because, and that's a technical support. You can see if I can just put that on another level there. So that's a prior resistance acting as support. And that's an important level. That's very psychological level. The reason why these pivots work is because anybody who went long around 294 back in late May, they got burned. So they remember that area, right? And then anybody who actually went short, they made money. So they remember that, right? So that's why, you know, these pivots and supports tend to work, right? Until they are broken. It's because it's the level where there's an inflection level, it's the pivotal level where the market made its move, right? Pivotal move, right? And so that's why these levels work, psychologically speaking. So anybody who went long here back in mid-May, they got burned, right? So they remember them, like 294, man, I hate that level, right? Anybody who shorted around 294, they remember this, like, oh man, I made a lot of money. So it's like that 294, 293, they remember that. So when we come back to that level after this thing soaring, a lot of traders remember that. Either it caused them pain or pleasure. Either way, they remembered it. So a lot of times when the when the pivot level works is because, okay, maybe they showed it and they made money, and then they tried it again here, maybe in mid-May here. This was what, May 11th, May 18th, and then it didn't work out at that time. So they thought, you know what, maybe this time I should go long, because look at, so they showed it here worked out. They showed it here, didn't work out. They showed it here, it seems to work out for last hour, but then he brought back up. So now they're like, okay, that 294, it used to work. The short setup used to work. It seems like it's not working quite a bit. So that's kind of becomes that like that level, a lot of anticipation, a lot of skittish type of action is occurring. It's like, I don't know, is it gonna come down this time, or are we gonna act as support? And that's kind of what we're seeing here last just a couple days. You can see here. And a lot of dip buying, activities that have occurred. So looking at things, my short-term moving average, this is a short-term moving average here, and that's pretty much been moving sideways. So right now, in the short term and the micro term of things, we're trendless, right? We do have a short-term cultivation of higher lows and higher highs in the short term of things. We don't know yet for sure if that level is going to act as higher low at this point. We need to get up and clear this level at 297 first before we can categorize this level as higher low, because this thing can come back down potentially next week, then it could become a lower low, right? So we're kind of moving sideways. And we're kind of getting into maybe next resistance. I think, some people might argue that this is potentially another inverted head and shoulder or head and shoulder formation there, left shoulder, head, right shoulder. And we talked about it before. It happened in May and it really didn't pan out. There's a lot of fake out that happened. It looked like, last time when we saw this thing building something like this, pull back, looked like it was going to break down, and then got just right back up. It actually gapped up. Remember that last time? And that's what happened here. And so that's why I don't put too much weight on that. That's why I put most weight on the trend itself, right? And looking at the oscillator here real quick, bears really needed to materialize from this rollover on the oscillator, because you can see last time when we saw here, let's zoom out here a little bit, because last time when we saw that, oscillator rollover right here, that was a rollover, right? That was that cross. That's a bearish cross right here. When we saw that, we did see about, what is that? 6% decline. And that's straight down 6% decline, and then made the oscillator come all the way down to the bottom of its band, and that's when we hit that oversold level. And we've been talking about this throughout the daily update videos. This time we crossed here, right? And the oscillator been falling over, yet the price is actually from that level, from the level when the oscillator rolled over. We're breaking even. So you can see that something is changing here. Like, bears really need to materialize from this. Bears need to materialize from this. It's still not too late because we're still not yet overbought, oversold level yet. I mean, you could see this thing kind of goes like this a little bit and then fall over. And I've seen that happen also. Right here, you can see this looked like it was going to cross back up right here in this zone right here, May 20th. It looked like we're going to cross back up to back of the top of its band. Instead, we rolled over. So we could definitely see something like that here. There's few things this is actually an inflection point. There's a few things happening. Bears really want to materialize from this micro term selling momentum on the oscillator going into early next week as quickly as possible, right? Because it's dying. That selling pressure is dying. If this thing actually crosses back up like this, right? If we fully crosses back up, there might be some head fakes and things like that, but if it fully crosses back up, that is actually bullish in a short to mid-term, because you can see since the early April, every time when this thing pulled back, right here, right here, right here, right here, it went all the way down to the bottom of its band. But if we stop short, it doesn't come all the way down to the, stochastic about 9 level, you can see here, and it stops short at about 33 level here. And then if it crosses up, goes all the way back up, it must goes all the way back up for this to confirm. That means the trend, the uptrend is strengthening. It's getting stronger, because it didn't even come all the way down to the bottom of its band, but it stopped short and then got right back up. But we wouldn't know that until we get to all the way back to the top, right? And that will, I'll give you guys an update on that on a daily update video next week. So bears don't want to see that. Bears want to, because we still have down pressure. We still have short-term down pressure looking at this oscillator. There is still selling pressure according to this oscillator. So bears can still materialize from this. Bears can still bring it down and make this oscillator come back all the way down to the oversold level. And with that, you may see, and I think to jumpstart, obviously, bears need to gap it down or see a flush early morning. Then there's a good chance that bears can even bring it down to 286 or I don't know about 286 because that's quite far away, but at least maybe 292. At least come down and fill this gap at retest that moving average at 290. I think that's the best bears can do with the circumstance that is given, because from here to here is not too far away. So if the bears can really bring it down early next week, Tuesday morning, then there's a possibility they can come back down 292. The best case scenario for both buyers or sellers is 290 to retest that longer term moving average. Remember, the longer term moving average does have pretty impressive resume, because when that thing is rising, you want to give benefit of the doubt to the buyers. Buyers, obviously, we are gaining just a very, very micro-term momentum here. Things can change quickly. This is just very, very short-term rally here, just last 4 hours. So buyers want to continue in that and make this oscillator go back up and change this into a bullish uptrend, and then get up here and fill this gap at 302.50. At least come back and retest at 300 level, right? So there's an update on the 65-minute chart here. Let's go back to daily. So when you look at my daily chart, on the S&P here, you can see that I have my longer term moving averages hanging around in that vicinity. All my short term moving averages are rising. They've crossed. We talked about this scooping action, right? And that moving average has been acting as strong support. We got the rising pivot in that vicinity. And this gap still remains open. So potentially a bull pennant, bull flag type of pattern. Again, it can break out either direction. And that's why I don't go by that right here. Looked like that was bull pennant pattern, right? Looked like it was supposed to go higher. We broke lower. This one looked like bull pennant pattern. It initially broke higher, but it fell lower right away. That's why that's not a prudent setup to go long or short in those kind of a short-term contraction, consolidation, continuation pattern trade-off of, unless you're very, very short-term, like you want to go long here and place your stuff just below or something like that. Maybe you could do, and you're waiting just for that one quick pop on Tuesday morning, you're going to close it out right away. Then maybe you can play that. Otherwise, if you're a swing trader, longer term trader, that's not going to work because there's so much up and down shenanigan can still happen. So the posture is still bullish in the longer term, obviously, but we're now coming up with the meeting with some of the longer term moving averages, right? And that longer term moving average has been hanging around, and twice though, it's already got rejected here twice. You see that this time here, met with that longer term moving, the pink moving average, April 29, we did see it. That's about, I think that's about 6% correction. And then bulls attempted to, break higher again back in May 11th, right here, got rejected again, about 6% correction there. This time around, because look at, we hit it once and the next day, boom. Hit it once or twice, next day, boom, to the downside. This time we're hitting once, twice, third time, fourth, fifth time. We've been hanging around there for the fifth time, like fifth day. So 5 days we've been hanging around. The longer you let bulls hang around, you know how bulls like to operate. That's how they absorb. That's how they absorb volatility. That's how they absorb resistance. Right? This is how bulls like to operate. They like to do things slowly. They like to kind of hang around, consolidate, and then find their momentum, right? And bears don't like that. So this price action actually gives you a little bit more bullish connotation going into next week. It doesn't mean like early in the morning, doesn't mean Monday. It means more of a, now we're looking at daily charts, so we're looking at more of a for the week, next week, Monday, Tuesday, Wednesday, Thursday, Fridays. I already done my 65-minute chart looking at early next week, but looking at the daily chart now on your screen, we're looking at more of a, midterm analysis now. So that hanging around action right here, I wanna give that benefit of the doubt to the buyers. Doesn't mean like it could come down, feel a little bit of it, maybe retest the moving average and then get up. But what I'm saying is, even if we do see a pullback early next week, it has higher probability of resulting in higher low action, meaning we got that subtle higher high, pull back, higher low, and then potentially get up here into 302 or something like that. Or we may just continue higher. So at this point, there's a lot of bullish momentum. Bulls are hanging around, bulls are floating around, and they're just kind of waiting for the right moment to push it up higher. Let's go to Qs. So the Qs, very, very different posture. Because I think on the spider, we're talking about these two moving averages, and the price is nowhere near these two moving averages, right? I mean, we are seeing so many bullish crosses now. We're well above all the moving averages, and we have to continue to give benefit of the doubt to the buyers. Looking at the Nasdaq, are we overbought? Yes, but how many people thought that they were overbought maybe in April? How many people thought that it was overbought in April 16? How many people thought it was overbought in May? How many people thinking it's overbought now? and that's how it cultivates higher lows, and that's what you call a uptrend, higher lows and higher highs. So we want to continue to give benefit of the doubt to the buyers on the Nasdaq. Nasdaq's been strong, and we want to continue to view it and continue to give respect on this sector that it may continue higher. And I think they got no more down gaps. This gap is the entire down gap has been filled. There are no, how many up gaps now? If you just track gaps, you'll know already the momentum is to the upside. You got one big gap, 2, 3. We got 4 up gaps versus just one down gap. And people always say things like, well, yeah, these gaps must be filled. No, it doesn't. It doesn't have to be filled. We can go back here. There was a gap here. Was that ever filled? This gap, remember? That's back in January. That gap was never filled. That January gap was never filled. We can continue higher or lower, and there are gaps here, right here. So people always say that because they think it must get filled, but it doesn't always get that. There was a gap that never got filled. There's this big gap, you know, that never got filled. You can see that that gap never got filled, even though it did brought it down, but never filled that gap. We can continue here. There seems like there was a gap here that never got filled. There was this gap, right? This gap never got filled. This gap never got filled. This gap never got filled. There's a little gap never got filled. So, you know, you get the point. So, and some people say, well, okay, well, this time is different. Well, if you know the quote, famous quote by Sir John Templeton, you know, 3 most dangerous words in investing is this time is different. Or 4 words, right? This time is different, right? 4 most dangerous words in investing is this time is different. I mean, yeah, I get it. Market sometimes do something differently. Just once in a while does something crazy too. And does do things, unthinkable things. But then the probability of betting on something, some unthinkable things, is pretty much looking for a jackpot, right? So if you're like aggressively shorting, like you're getting into like way out of the money puts. Let's say you're getting into, I don't know, 170 QQQ puts that expires, I don't know, August, July. That the reason why those puts are extremely, extremely cheap is because it will be, you know, it will be very rare occurrence, in my opinion, after the market has moved. I get it. If the market has already gone up, it's been a long, you know, if it's been a long term, like it's been a, you know, big, it's already been a long uptrend. Like it's already been in like, you know, it's already been long drawn out uptrend already. Like let's say it's been already long drawn out uptrend like this, right? And then you start buying puts here aggressively, let's say somewhere up here and looking for a big, even then it's difficult because you don't know if that's the top or that's the top, that nobody knows, right? Even then it's difficult, but at least you get a better shot at it after that trend has been in this prolonged uptrend for a while. Maybe we're talking couple years. But you can see this, if this was the low, then this trend is only a couple months old. That means we want to continue to give benefit of the doubt to the buyers as long as we continue to trend this way. And so that's why, you know, I don't know, looking for those kind of jackpot plays. You know, you might get hit here and there, but you could do the same thing in casino, I think. Some people do get hit. Some people do make money like that. But just like some people, small percentage of people do make money in casino. Very small percentage. And some people do make money in the market. You know, but maybe it's best not to go on puts with Qs. Maybe you want to look for maybe some penny stocks or stocks that have a huge fluctuations, right? Maybe those will be better vehicle for those kind of lotto put plays. Anyway, let's go to Russell 2000. Russell 2000 That's a pretty significant gap up, and buyers are protecting it, and that's a bullish. We talked about that's an island reversal, right? We got the down gap, we gapped it over, and then we looked like it was gonna come down, fill the gap, but we gapped it up right up again. So we are holding up at 132.25. We have the rising uptrend support. So we want to, looking at things from more of a midterm, yes, we're bearish in the midterm. Mid to longer term, we're more bearish. Do you know why? Because we do have, look at that. That's a lower low, and that's a lower high. You see? So in the primary term, we are still in a downtrend. I would actually categorize Russell 2000 bearish, more bearish in the longer term, neutral to bearish in the midterm. Short-term bullish, looking at daily chart, short-term is bullish because we got these higher lows. And so it's a little bit more weaker sentiment here on the Russell 2000, but it's a little bit different. Like if these are different stocks, right? Spider, QQQ, Russell 2000, they're individual stocks, then you can trade it like that. Maybe go short on the Russell and maybe go long on Spider and Qs. But you can't, it's hard to do that with the indices because they tend to move together. You may see some like money rotation where like you're gonna see Nasdaq like lagging a little bit and then Russell pop, or you see like Nasdaq going higher and then Russell seeing weakness. But if you look at a longer term, broad market sense, they are essentially gonna go up or down together. You know what I mean? So even though I categorize Russell 2000, neutral to bearish in the midterm, it's difficult to short unless again you're short term, because we have the Nasdaq and S&P moving higher, and we're gonna get into semi in a little bit, and semi is also very strong, and so we have to kind of look at it as more like not that Russell is gonna drag the Nasdaq down, more like Nasdaq and the semi and S&P is gonna drag Russell higher. And at least that's what I'm thinking. That's my opinion. I am positioned in that way in the longer term. But anyway, looking at the Russell 2000, we have got this big gap here. That's a pretty significant gap. Bears, you gotta protect that gap. Make sure bulls do not fill this gap. Maybe then you can come down, fill down this gap, right? This up gap. But while this up gap is open and bulls go up and fill this gap, that's bullish in the longer term. The midterm, though, once that gap gets filled, we're probably going to see a resistance and pull back. But I will look to buying into weakness for a higher low and maybe close out some of your longs on the strength. That would be my strategy on the Russell 2000. Right, that will be my strategy on the Russell 2000. So bulls want to kind of protect this level of 132.25. Maybe let bears come to 129, fill that gap. But you want to keep that momentum going, keep that gap open there, and we still got that bullish cross right here. You see that where it crossed up? We still have that, and price is above it. Do you guys remember on the S&P? We saw that cross here, and it's been floating up ever since. And remember on the Nasdaq, we saw that cross here, and it's been moving higher. Russell 2000, it's lagging, but we just experienced the cross. Bears trying to bring it down, trying to kill that momentum, failed. Bulls brought it right back up, and now that moving average is starting to find some momentum. So I want to give benefit of the doubt to the buyers in the short term there. Let's go semiconductor. Semiconductor, look, that moving average right here, it crossed. That's a bullish cross. It's been moving higher also with the higher lows and higher highs. Also different picture on the semiconductor. Semiconductor is now well above that longer term moving average. That moving average there, this longer term moving average there, we're staying above it. This is important level right here, obviously 136 level. That's a prior resistance, prior support, prior resistance, prior resistance. Currently acting as support. We got this two gaps here. We got two down gaps remaining. This gap, this gap. We got how many up gaps? 1, 2, 3, 4 up gaps. Currently, bears are losing this battle. Bears are losing this battle, right? And I thought it was interesting. I was just looking at my other screens, and I just saw that this is semi. Semi is actually starting to cross up. This is 65-minute chart. And semis are actually crossing up, but interestingly, usually they come down here, but it kind of stops short, but pretty near to it, but we're starting to cross up here. And usually when they happen near the oversold level, usually since April, they usually, when you see they start to meet, right? That you see two lines here, that pink line and blue line. When they meet, they usually get back up. There's a little hiccup here. You can see just a little hiccup, but next day cross back up and get back up there. So that in itself still have that bullish sentiment there, and we want to continue to give benefit of the doubt to the buyers on the semiconductor. Also, let's go to some of my current holdings. Apple and Nasdaq, they look very, very similar, and so you can see Apple is very far from that long-term moving average. Again, remember Spider's just retesting that moving average, and Apple's way far from it. So we have a very bullish momentum and sentiment going on here. Are we overbought? Look at that on the this 65-minute chart. You can see we're pretty much stopped short in the middle of it. And when you see here, this is actually a great example. You can see this is oversold level, overbought level. But when you see the crosses happening in the middle of it, it doesn't come all the way down to the bottom of its band, but rather it stops short in the middle, right? And then bounces up. That's when you see that the trend is getting strengthened and the buyers, right, are getting ready for the next leg run higher. But remember, this is how bulls like to operate, right? Bulls like to take things slow, especially after decline. It doesn't just go straight up. What it does is it goes up a little bit, pull back sideways. Goes up a little bit, pull back sideways, and then boom, right? And also what that does is it's kind of what the market is doing is, let's say people are shorting, like bears are shorting down here, somewhere up here, and it kind of encourages bears to even short more because it's gonna look like a bear flag. That's a bear flag. And usually when people talk a lot about volume, that actually is a trend. Volume does matter, especially when you're looking at the equities. But if you actually check the volume here, very low volume. These consolidations usually have very low volume. So then what happens is a lot of bears are going to come in. Okay, look at that. We're grinding higher up. And then we're seeing low volume. And therefore, there should be another leg lower. That actually works if Apple is in a downtrend. So if you see Apple doing that maybe in this turn, that works. When Apple's doing this and you're trying to do that, that doesn't work. Does that make sense? So Apple looking pretty bullish here. And I kind of want to look at daily real quick. Yeah, so daily we're pretty much kind of grinding here, right? Pretty much grinding here on the daily. But I want to continue to give benefit of the doubt to the buyers. On the daily side, it does look kind of overbought on looking at this daily chart. But when the uptrend is like this, it can grind and buyers, what they're gonna do is they're going to take its time and rest and then get up. Take its time, rest and get up. And it can't continue for a while. So nobody knows where the real top is. Let's go to Intel. There's gap here. I've been long Intel since 35s. I've been holding my entire Intel position. I've been also writing articles about it since back here, 2016 and 17, and been adding on these dips, almost on every dips I've been accumulating. But I was pleased to see that you see how there's a big consolidation here. And again, that's how bulls like to operate. They like to absorb selling pressure buy, just consolidating, right? And then looks to be breaking out here. What worries me in the short term, and I don't really care about my short term because I mean I've been holding this thing for like last 3-4 years, so I really don't care what happens next week. But looking at this here, you can see bulls got up and attempted to fill this entirety of this gap, but failed. Did not fill that gap all the way. And with that, bearish brought it down here a little bit, right? So that's a little bit bearish. We got this gap still remaining though. So bulls want to get up here and fill this gap as soon as possible, or get up and maybe gap it up. And then 68.58 will be next level of interest there. Let's do that. Let's actually, there's a little bit of gap, right? Just a little tiny gap there. Let's just annotate that. So there's a little bit of resistance in that vicinity, 68.1. But this is a great sign that we're holding above this consolidation level, right? We're holding above it, resistance, support. So we want to give benefit of the doubt. If market jumps next week, if semiconductor jumps next week, you're gonna see Intel jumping up quite a bit from this last level. Let's go to Disney. And Disney is a new position that I've accumulated down here, I think 99 or so. I want to share this because we got pretty nice island bottom reversal happening. So you can see this is where it closed. This was back in March 6th, and that's where it opened. And with that, they create a down gap. So then when this thing gapped up from here to here, we gapped over this gap right here. So this turned out to be in an island, right? So if this gap remains open, this could possibly be major bottom looking at things longer term. Could be major bottom looking at things longer term. Obviously, we can see we got a lot of levels. There's a lot of resistance and oversupplies, and it needs to go through. We got this down gap here. We got this downtrend resistance. Probably this level also is going to act as resistance. You can see that that's a prior support, probably going to act as resistance. And that's a level when you see these moving averages crossing down. So it's not going to be easy road to the upside. So this is a great setup for long-term investors, but not so much unless you're very short-term from here to here. But it's not so much for the short-term traders. But here, let's go to weekly chart here real quick. So if you look at this, you can see if you just look at this here, going back to this level, we got some this consolidation going on there, and some of these levels were a good level to buy. And you can see even here, it looked like it made a lower low, kind of trap. Is it a lower low? That's more like an equal low. And it did look like there was a lower high. And there was a lot of resistance in that. I bet if I put a moving averages, man, there's moving average going down everywhere. When you see how, I mean, this is a weekly chart, so it looked like it just went straight up, but trust me, there were so many up and downs over here. It probably got a lot of people got really scared, and then we saw kind of steep correction and then got up. But again, that looked like a straight line. You go to daily chart, there's a lot up and downs. And so that's kind of, you know, if you're a value investor, you got to learn how to go through that up and down and look at things from more of a longer term objective. But short term, there's a lot of bullish sentiment on Disney. But in the mid to longer term, a lot of work has to be done in this area, man. It's not going to be easy going through here. Not going to be easy. But let's see if that island gap is going to provide some pressure to the upside, and potential. Hopefully, we can able to get up here. Let's go to gold. And so we've been talking about gold here. We've been talking about these consolidation pattern here, and this is kind of what I'm talking about. This time it looked like it's gonna break higher. We came right back down. So it's not always like, you know, it's not always where it breaks out clean. Sometimes it's gonna do something like that, and same thing happens to the downside. It's gonna pull back and then goes right back up. But trend is up. We want to continue to give benefit of the doubt to the buyers. However, when I look at my weekly chart, I kind of see that it's getting into that overbought sentiment. overbought sentiment the weekly. So doesn't mean it's next week, doesn't mean 2 weeks from now, it could be 3 weeks from now, but we're getting there. Potentially gold, silver is looking for a pullback. But again, when I'm looking at my other screen, a weekly chart, so we'll have to follow up on that. But on the 65-minute chart, we got that cross there. So it seems that when we see that cross, and there's a little bit of sideways move there, looks, you can see right there, looks like some sideways move from here and here, and happening here. Potentially make a run. We got the gap that probably buyers want to go up and fill. So let's go to silver. And silver made some good progress, and we talked about it. Let's go to weekly chart here real quick. Look at that. That looked like a, if that is a major bottom, that looked like a mother of all trap. But look at this. It's not like it's first time it did that. It did that here also. Let's go to, where's my box? Let's put a box here. Let's do that. That definitely was a mother of all trap there. What is the performance on that? From here to, that is a whopping 444% gain if you bought in late 2008. Held it for the next, what is this? 9, 10, 11, 11. So about 3 years. 3 years. Would that be something like that? Would that be? Maybe. We'll follow up on that, obviously. We'll continue to check on that. But I think what I like about it is this was important pivot. That's a prior support. And we thrust higher. And look at the long-term moving average there. I mean, there's some, that long-term moving average has an impressive resume, I have to say. We got the resistance here, resistance there, resistance here, resistance here, resistance here, resistance here. And then now price is gotten back up here, that support there. We fell through, came right back up. That's the island bottom, right? Doesn't you have something similar? And then we have the long-term moving average hanging around here. So I think that's a good thing that we gotten above it. I think those want to hold about 1540, 1483. If we can do that, maybe even fill that gap will be okay. Filling the gap will be okay because that's going to act as support, and then get to 1751 there. Let's go to Bitcoin and the video with this. So Bitcoin continues to struggle in that vicinity, but we got these moving average clusters here. I'm kind of wondering if that level is going to act as support. So like a midterm, mid to longer term, we have bear sentiment because we got lower highs and lower lows. Remember, the Bitcoin needs to break out of that and do something like this. And so it'll be interesting to see how we got all these moving average clusters here. And it will be interesting to see how the Bitcoin is going to react in that vicinity. Either are we going to break higher to the upside, or are we going to come down and fill the gap and come back to 8? So that's kind of an inflection point. But buyers want to see this thing getting up, making it equal high, right? So we'll follow up on that next weekend, and we'll go from there, right? So you guys enjoy your long holiday weekend. And I'll come back to you guys on Tuesday after market close. And we'll do our daily update video, and we'll go from there, right? You guys have a wonderful weekend, and good luck trading next week.